And thanks for staying with us, everyone. Ghana's international reserves have surpassed the IMF program's completion target well ahead of the May 2026 deadline. This achievement was confirmed by the fund officials following a staff-level agreement with the government. Here's more in this report.
Bank of Ghana's economic and financial data ending March this year show that the country's international reserves in February 2025 stood at $9.2 billion, representing 4 months of import cover. According to Ghana's program with the International Monetary Fund, the country should have reached this level in May 2026. So if it is not hit with any serious shocks in the coming months that could deplete its reserves, then we may argue that Ghana could still end the program with some strong reserves. We should also not forget that we could be receiving some inflows in the coming months, like the $370 million from the IMF in June this year that should hit Bank of Ghana's account. The development could go a long way in helping sustain the city's recent good run against the dollar. This is because the not so good reserves in the past has seen some speculators betting on the Bank of Ghana's ability to step in and support the Ghana city in crisis times.
All right, join us on Zoom. Manager Macroeconomic Research, GCB Bank PLC, Courage Buti. Good afternoon to you, Courage. What does Ghana surpassing its IMF program completion target for international reserves indicate about economic stability? How significant is this?
Well, good afternoon, Daryl, and good afternoon to your listeners. The evidence, as eloquently read out, is just a testament of the fact that necessity is the mother of probably all inventions. We were in a fix in 2022. I think at the time when we were going to the program, the IMF estimates that we might need a balance of payment support to the tune of about 10.5 or so billion dollars. And that was what they were trying to mobilize from the funding under the program, the World Bank, and then the other catalytic investment that are supposed to be triggered under program to support that, because that was the estimated balance of payment gap. But we have lived with gold all this while. We've breathed gold. We've destroyed ourselves with gold all this while, our rivers and all that. But somehow, out of that necessity, someone thought about the idea of using a local city to accumulate gold reserves. And that has been a big part of the reserve accumulation strategy since then. Following that, the current administration had decided to build on that to put some structure around the gold purchase in the name of the Gold Board Agreement, which is supposed to sustain those gains and even make it more transparent, which means that we should have a mechanism going forward to help accumulate more into our reserve through that channel. And then we would have been solving a perennial problem that has plagued us all these years in a very not too if you like, difficult way, but just that a certain idea pop up, a certain change in direction and approach change. And this is what it means for the economy. Is the reason inflation against all odds in Q1 is trending down as opposed to what we've known in times past. Is the reason the city has been stable in Q1. Is the reason we're seeing the stability, sense of stability emerging. And why I believe in a matter of time, monetary policy will begin to look more accommodative to try to support the real sector to grow, because we've dealt with a key anchor problem, exchange rate, and we've done so through accumulation of gold reserves.
What should be the strategy to maintain this going forward?
So it's about, now there is a bit of a structure to it. We know the Gold Board Act has been passed. The appointments going there, there should be competent people who understand the sector and in the industry and should be able to deploy the best of resources available to us to accumulate more gold. But gold buying should not be the only way we solve our FX problem. We should use it as a launch pad to do other things. Some of the structural issues in our trade dynamics, really. We are still largely a raw material exporting economy. If you stabilize your FX environment, you stabilize inflation, which is linked, and then growth is robust, and your economy begins to look attractive, you deal with your debt issues, which are the troubles we are solving now, to be able to attract investments into the other priority sectors you intend to develop. So, for instance, would the next level be expanding the gold refinery capacity in Ghana? Would the next level be increasing our share of ownership in oil? Would the next level be refining cocoa, a chunk of it locally, to derive the full value so that we can gain more from an export, and then we can own more of the share of export receipts that come to the local economy? Because all of the 15 plus billion in total export receipts that you get, if you disaggregate it, the portion that belongs to the economy is not significant. The gold arrangement is making sure that we own a good part of that, at least the small scale segment of that gold export. Let's try to replicate that for the other sectors, but you will do so if your environment is predictable, stable, and can attract foreign investment into, or patient capital into some of these sectors, so that we can expand our scope. I think those are the next levels we should be thinking of, and not rely on gold for reserve alone or gold board alone as the panacea to our CD problem.
Yeah, let's touch a bit on the risks going forward. I mean, gold is a safe haven, but there's also this concern about the trade war. We are going to be hearing from the World Trade Organization, which is downplaying the impact of the trade war on Ghana and other African countries. Is there something to be concerned about going forward? Should we also be concerned about changes in commodity prices going forward, and how that influence or help us maintain this growth in our international reserves?
Well, no doubt the trade war means a paradigm shift, probably an age-old system that the U.S. themselves have championed over years has been eroded at the call of Donald Trump and his administration. But be that as it may, that is the reality we have now. We've long believed in the fact that produce as best as you, and using your best technologies in the value chains, you are most efficient, and trade that for your needs. That hasn't changed. Probably US is taking a stance, but this is time for Ghana to look at which other trade routes to develop, which other trade partners to emerge, and what at all are we exporting to the world, and drive efficiency in certain value chains so that we can be competitive. Because if there's a 10% tariff, can you counter that, the impact of that tariff, with a more efficient production methodology, expanding the economies of scale and scope that beats down your cost of production, so that you don't even feel the impact at all in terms of change or higher prices for investors? Those are the things we need to work out. I don't have the answers to them, but we need to look at them and see where our advantage lies and how we can maximize the returns or the gains from those advantages to our collective benefit as a nation. Of course, US will do what they have to do, but we have to also look out for ourselves, and we have to look for other trade partners who may be more liberal in approach. And the term market presents a huge opportunity for most of the things we produce locally, and beyond. After there are other regions that we could develop trade routes to when we put our shoulders to the wheel, really. So definitely trade war and then its consequences have an impact, but we need to at this point start strategizing how to navigate it. And I think the points I'm raising are just a few of the options available to us to explore.
Yeah, I just wanted to talk, because you've talked about it, I just wanted to talk about the city as well, because I mean the excitement is about how this is also going to impact on the performance of the city going forward. How significantly would that be?
Darrell, is the reason the CD is stable, this stable. Quarter one typically is associated with depreciation pressures. We haven't seen that this year. Yes, there has been some depreciation, but not as pronounced. And we are seeing the level of intervention on the market, the return of confidence in the market. The speculative pressures are not as strong. And those are the things you want to see. Investors want to be sure that when I want to exit your economy, I have enough effect to do so. Traders need to be assured that there is enough supply to get in. Probably the next leg is when you begin to get portfolio investors flow back into the market, and then the liquidity sources are not just Bank of Ghana's auctions alone, or through the other maybe remittances channels alone, but there are also a myriad of other options through the investment channel where FDIs are coming in, portfolio investments are coming in. That's why we need to stay the course. But I believe that the reserve accumulation, the pace we are doing it, and how it's resonating with the market is a big part of why the CD has been stable in the first quarter, and I expect it will continue to do so in the second and third quarter, despite the potential, a number of multinational banks are out of the woods when it comes to the capitalization issue and may begin to pay dividends and all that. But we should largely be able to manage that in the second quarter without exerting excessive pressure on the effect, given the reserve levels we have currently.
All right, Courage Buti, happy Easter to you. Enjoy your weekend. It's going to be a long one. Do take care.
Many happy returns.
Manager of Macroeconomic Research at GCB Bank PLC, Courage Buti there. And so you heard us talk about trade. Well, the World Trade Organization has downplayed the impact of recent global tariff increases on Ghana and other African nations. Earlier this month, U.S. President Donald Trump announced a series of tariffs on imports, including a 10% tax hike on Ghana. Director General of the organization, Ngozi Okonjo-Iweala, addressed the issue during a news conference in Geneva, Switzerland.
The aggregate level, Africa's economic outlook remains broadly stable under current trade policies, with real GDP growth for the continent largely unchanged, even if reciprocal tariffs are reinstated. This is because Africa's trade with the U.S. is relatively small. The share of Africa's exports to the U.S. as a percentage of its total exports to the world is about 6.5%, and the share of Africa's imports from the U.S. as a share of its total imports is also about 4.4%. Nevertheless, this masks significant variation across countries. Some countries like Lesotho are particularly vulnerable due to their high reliance on textile exports to the U.S. market. These exports are about $240 million, or 10% of Lesotho's GDP. Côte d'Ivoire is another example, the largest cocoa producer in the world with about $800 million in exports to the U.S. Cocoa is a crop that is not grown in the United States. With higher reciprocal tariffs than Ghana, this can render Côte d'Ivoire's cocoa vulnerable to smuggling to neighboring Ghana, an unintended consequence. Africa is the future of global demand. By 2050, 25% of the world's population will be in Africa. Whilst the present trade situation is being sorted out, including a plea for the possibility of tariff exemptions for most of Africa, since this is where the largest number of least developed countries are found, 32 of the 44 least developed countries are in Africa. I have a message for the continent itself. This message is the need for more self-reliance.
Need for more self-reliance. Well, turning to some other story, the managing director of beverage manufacturing firm Coca-Cola, Felix Gomez, has revealed that over 150,000 crates of the company's products worth about $700,000 are smuggled from Nigeria into Ghana every month. During a visit to the Commissioner of Customs in Accra, Gomez called for stronger inter-agency cooperation to curb the illicit trade, warning that it threatens local industry growth and undermines tax revenues.
Ghana continues to grapple with smuggling activities at key border points across the country, a challenge that poses a serious threat to domestic trade and revenue generation. During a recent courtesy visit by the management of Coca-Cola Company Limited to the Commissioner of Customs and the Commissioner General of the Ghana Revenue Authority in Accra, Commissioner General Brigadier General Glover Ashon Anand underscored the need for strong collaboration between public institutions and private sector players to effectively combat the menace.
We understand the adverse impact smuggling has on business, undermining fair competition, and also affecting sales and revenue. But I wish to assure you that the Customs Division views these concerns with the utmost seriousness. As one of the agencies mandated to secure Ghana's borders and also facilitate legitimate trade, we are committed to working with you and other stakeholders to devise effective strategies to tackle smuggling. And we believe that through collaboration, intelligence sharing, and then coordinated enforcement strategies, we can significantly reduce this menace of smuggling.
Managing Director of Coca-Cola, Felix Gomez, expressed confidence in the Customs Division's commitment to enforcing regulations that protect local businesses and foster a fair trading environment.
We believe into continuing in manufacturing locally, because that's one of the main purposes why we are establishing the country. Obviously, as it's been raised, we face some challenges when it comes to smuggling of some of the products of Coca-Cola that are entering the country, where we believe that action should be taken at least to relook at what's going on over there. We have no doubt that with the close collaboration that we have had with GRA, and indeed with this, let's say, under the Commissioner General, Mr. Sarpong, we believe that it's also a big opportunity for us to reinforce even our collaboration further for mutual benefit of the country. And this is what we believe as a system, as a company, and we will do all that is necessary to continue to make sure that we sustain, or we invest to sustain, the economy in Ghana.
Smuggling does more than hurt the economy. It leads to unstable market prices, weakens the competitiveness of local businesses, and undermines public trust in enforcement systems.
You're watching The Marketplace on Joy News. We're taking a short break. We will be back with some more stories. Right, and that's it for The Marketplace. Thanks everyone for watching. There is more news on our website, myjoyonline.com/business. Fuel prices to go down marginally at the pumps from April 16. Airbnb must be regulated to ensure fair competition. Ghana Hotel Association demands. Check out those stories on our website, myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching. We will be back same time tomorrow.